Welcome, everybody, to today's Land and Everything Else podcast, where we talk about alternative investing, the non-stock and bond side of the world that we all work in and love. And we're so excited today. I'm getting the chance to talk on a current issue with a friend of mine that I made a couple of years ago, and he is a very inspirational person. And Tyrone Ross, we are so happy to have you to talk about the crypto space today. Thank you so much for joining us.
I'm so happy to be here. Thank you for having me. And I'm looking forward to this conversation.
Oh, me too. I'm really excited. So I'd like to start kind of just with the basics. You know, one of the things we talk about on Land and Everything Else is how alternative investments can help complement a portfolio. And so I guess I'd like to start with that. Talk to me about crypto as an asset class. When people ask you about just broadly crypto as an asset class, how would you define it? What characteristics might you give it? You are one of the experts in this space.
Yeah, I think there are a lot of people who will argue about calling it an asset class, but I think it deserves that now. I think it's a burgeoning asset class. That's the first thing. I think the second thing is you have to, at this point, I think, separate Bitcoin from everything else, just based on the fact that it has been around the longest, the biggest brand, which means you got more data, the ability for advisors who want to add it to a portfolio to backtest somewhat, and to run some analysis on it. And you have different metrics now that you can look at, no PE ratio, but some metrics that you can look at. So again, there's been, as you and others have done, there's been some studies based on what the ideal allocation is to add crypto to a portfolio. And again, for the purposes of this answer, I'll stick with Bitcoin. So there's a couple of things that I think, right? One, as it has evolved, right? It started out very volatile. You see now the volatility is starting to decrease based on some things that I'm sure we'll cover at some point. But adding it to a portfolio that the idiosyncratic, risk and properties and Sharpe ratio, all those really cool things, right? I don't want to get down that rabbit hole, but I think there's been data now that shows adding a 2 to 5% allocation to a portfolio can give you some really good upside, but you have to deal with the drawdowns, right? And the volatility, and the risk that comes along with that. And then Bitcoin, like any teenager, tends to sometimes operate like a high beta, stock. Sometimes it can be a store value safe haven type. So it vacillates between all these different types of things. So, but I do think a small allocation has shown, if you can stomach, again, some of the volatility and the risk, the upside is somewhat admirable. So I think that's where we are with it right now.
Yeah, one of the 2 years ago, to be fair, I haven't redone the analysis, but I took a look at Riskalyze software, and I actually put in a portfolio with Bitcoin and then kind of looked at how it performed, over different time periods. And I thought it was interesting. The allocation of Bitcoin a couple of years ago in that portfolio was definitely negative or low correlated to the stock and bond, international or domestic. And so from the standpoint of adding low and negative correlated assets to a portfolio, where stock and bonds do tend to walk up the same stairway, I do think Bitcoin does add a true negative or low correlation in a portfolio, which mathematically and from a portfolio analysis standpoint, we know works out to smooth things if you can stomach it. Definitely smooth some things over time, right?
Yeah.
So that's where my analysis got me. I haven't rerun it in 2024, but in 2022, it was kind of a fun little piece.
Yeah, the uncorrelated part of it as well makes a compelling case as well, right? Of how it performs against any other asset classes. But again, there was a time, I believe, last year where it was kind of lockstep with the stock market. So again, it kind of moves in and out of these different buckets, which I think I have a mentor of mine who runs a really large RIA and ex-Lemoine, and not really the biggest crypto hippie like myself. But he's like, once you guys get 20 years of track record, then come talk to me about it. Until then, I'm dismissing it. So fair enough.
Well, 20 years is coming.
It's coming. It is.
I mean, to be fair, one of the things about Bitcoin is that I've every time I've talked about it on a stage, to FBA, or to a class, you always kind of get this dismissive, well, it's fleeting attitude, right? A little bit of that from people.
Mm-hmm.
And at some point in the game, though, like Bitcoin, it's every year we're still talking about it. I think it's harder to write it off as a flash in the pan.
Yep. I agree.
That's my own opinion, but it does seem that way.
Yeah, it's not going away, and every day it lives and survives. Right? There is a greater chance that it's going to fulfill some of the things, not all of the hopium, but some of the things that I think that has been proselytized over the years. But I think a couple of things is important, right? There's a separation between little b Bitcoin, the actual token that everyone goes gaga over, and big B, the blockchain, to me, which is the revolution, because it's the biggest and greatest flashlight the world has ever known, because it shines this light on all of the inequities in the financial system, traditional legacy financial system. And I think so long as you're able to see that, and so long as it's around, right, then you get into price versus value. What is the value of that? And then versus what's the price that people want to attach to the token? I think those are two different things that as time goes on and people start to understand it more, they can be decoupled and people can start to form their own opinion and analysis around what it's actually worth.
Well, and I'd like to dig a little bit in that. We've got blockchain technology and then we've got cryptocurrency. There is more than Bitcoin in the cryptocurrency space, and they all have a slightly different feel and capability. But when we talk about blockchain technology, one of the ways I've described it, please correct me and make my analogy better, because you're definitely the person to do that. What I like about blockchain is it's both public and at the same time anonymous, right? So I can walk into a room in front of a group. Let's say I'm in an amphitheater. And I walk in and I say, Craig owns this pumpkin pie. And then you walk in and I say, Craig gave the pumpkin pie to Tyrone. Right? Everyone then sees that I gave you that pie and now it's yours. There's no question as to who owns it. Everyone knows that transaction happened. And we can be anonymous, right? We don't necessarily have to be the ones having the pie, and then you can sell the pie later on. And what I like kind of about the analogy of we're all in an amphitheater is that we're sort of announcing, hey, everybody in this amphitheater, everyone on this blockchain, this transaction occurred. We know that X went to Y and Y now owns it. And now if Y wants to sell it in the future, there's really no disputing who owns that piece of the pie, right? And I think to that end, when I look at blockchain from my end of the world, one of the things that drives me absolutely batty about finance is, this idea of title insurance. Right? It's this idea that, I own a house and I refinance a house, but I got to spend another $1,500, $2,000 in title insurance to make sure I own that house. So the bank's willing to write that note. And every time I refinance that note, or every time I get any kind of other debt on the note, or anytime I get a reverse mortgage or a second mortgage or a HELOC, or when I go to sell the house, yet again, the next person has to have that title insurance. We're constantly paying these firms to research the title and see if there are any disputes or any problems. When I look at blockchain, one of the first applications, I think, is going to be that world, right? Like once we establish a property, physical property ownership, couldn't we just use blockchain technology and kind of do away with the other? Or am I missing something?
No, you got it right. So to back up, I would probably swap the pumpkin pie for sweet potato pie, but that's...
You know what? And I would agree with you 100%. It didn't even occur to me the superior pie.
So that's the first part. But yes, I love that example. The example that I give, which is very similar to explain this to people, is if I see Craig on the street, I could walk up to Craig, hand him $5 and walk away. No one needs to know that happened. He knows it's $5. I know it's $5, whatever. That's never been able to happen on the internet. No. Now you can do that, right? You could transfer value to anyone, anywhere, at any time. Don't need to know if you're Republican, Democrat, pumpkin, sweet potato pie lover. Doesn't matter, right? Here's the value. I'm walking away. Value. Notice I didn't say money. Now to your deeper point of part of the evolution here is now NFTs are affiliated with like purple monkeys on the blockchain.
Sure.
But there's a broader use case of what you're talking about when they evolve, where now that title or that note or that degree or that cert is on an NFT. And that NFT can be traced, it can be transferred, There could be value in that NFT that is, that throws off a dividend in perpetuity to a creator. They always get that stream of income. So what you're saying is exactly right. There's no reason why we have to keep doing this. We can verify that I bought the house at this price on this date, right? These things actually happen. And that can be recorded on an immutable ledger that can never be changed, that is always available to anyone. I don't have to call Bank of America and wait for 30 minutes for someone to tell me it's going to take 4 months.
Right. And I think to that end, as you play that analogy out, one thing I always think about, right, is right now, a builder acquires a subdivision property from a landowner. The builder then subdivides that subdivision into units and then builds a house on that unit and sells the house to the first buyer. Okay. So that builder's obligation for that home, they're going to build a structurally sound home that has to pass inspections at the moment it's built, right?
Yep.
And then the buyer then takes that home, and we do, even then, a title search to make sure that landowner builder title went well. But then it becomes this first owner's house. How would builders act differently if every time that house sold in perpetuity, they got a little cut of it? Would they build it differently?
Right.
Would they build it better?
Right.
Would they build something that would last 500 years instead of something that would last 100 years?
Yep.
And you start thinking about how blockchain, once we can attach it to more physical properties, really changes the way we might even construct a car or construct a house. If you had an incentive for Honda to receive a payment every time that Accord traded hands, they would build a product that could trade hands more often.
Yep.
I would think, and perhaps trade hands for longer.
Mm-hmm.
I don't necessarily think that's bad for a consumer. It changes a lot of economics, but it is a fascinating thing to go into when we look at blockchain. I mean, you really start changing durability. I think that's just the tip of the iceberg.
Yeah, no, it is. And again, just to bring it home here to something that's very familiar to us, what happens then with estate planning in smart contracts and things on blockchain where little Johnny is supposed to get his inheritance and he's not going to get it until he's 21 and he's going to get it the third Tuesday of February every year and at this amount, and it can't be changed, and it's going to hit this wallet and this account, right? Like, so you get into these really intricate things where, and my greatest frustration, again, you will not talk to anyone in the world who loves crypto more than me. I promise you, I'll give you 2 lifetimes. But my biggest frustration is that there's so much money thrown at, again, like digital monkeys, where we could be solving those problems as some of, the 401k rollover taking 6 weeks. Like, that shouldn't be a thing, right? We could spend a lot of these money solving a lot of the issues in the current financial system. But again, we're early. It's going to take time to evolve. But again, what you're saying as well, that is such a powerful thing for creators. Imagine, a world where the next Taylor Swift 20 years from now, 30 years from now is now using NFTs and, blockchain to be able to interact more faster, cheaply with their fans. And I was with Taylor Swift when she recorded her first album or when she played my local library, right? So I was there early.
Yeah.
I ride that success with her and I get all these different benefits and everything. And I can show, right? I have the provenance to show. I was there first. I was fan 3 of 20 that came to the library and heard her screw up this one song, right? So it gets really powerful when you look at it that way.
It does, and it also, you start securitizing some very interesting things there.
Yeah, absolutely.
Is like you didn't have a security and now you do.
Mm-hmm.
Right? I want to be the third badge to see Taylor Swift.
Yeah, absolutely.
Some commodity grade.
Yep.
It does. The economies, the possibility of economic change is big here. And I think personally that's why Bitcoin has price points that it has. Is not necessarily you're buying something today, but you're kind of, okay, well, in the future, what could this do?
Right.
And to me this is this cryptocurrency thus far has been a pretty big exercise in what can happen.
Yep.
As far as valuations go. And then when you do see markets shake in crypto, I think a lot of that is, oh my gosh, like, is there a regulatory pause? The fear, the risk, of uncertainty. But I'd like to bring up a big issue that I've gotten when I've talked about crypto to groups and you hear on corporate stages, and that's just a very simple sentence: Bitcoin is for baddies, right? Is that Bitcoin allows nefarious activity to occur, unrelated, unregistered, and therefore it becomes risky, or there's something disingenuous about it. How do you respond to Bitcoin is for baddies? Because I know that I've had that come at me on multiple times when I'm talking.
So the persnickety answer is, what's more used for nefarious things than the almighty dollar, right? That's just the quick in response back, right? The dollar. The internet is used for nefarious purposes. Anything that is used for good, man will try to make evil. Chainalysis just released a report. The data shows that 0.34% of all the transactions on the blockchains have been used for nefarious activity. Now, based on the amount of money that's transferred through blockchains, it's a pretty big number. I think it's I want to say it's 28 billion or something like that. 28 billion too much. But again, it's highly auditable. We can kind of trace these things down. That's part of it. When I get asked that, I say this: that is 100% a fact, right? I reference what I said before, right? The dollar is used. Banks pay fines all the time for money laundering. Is why we have KYC, AML. What needs to happen, though, again, if you look at a lot of the use of the internet in the first 15 years that it was around, wasn't a lot of good things going on then, but regulation, things evolved, more companies were built on top. You can find some things on Twitter right now that aren't necessarily FinTwit, right? Very easy, right? Sure. You can find some things on YouTube, and YouTube has to say, hey, they ask you, is this children friendly? We have to, it's a teenager, right? Teenagers they do a lot of good things, but they do some things too. You may catch them in the backyard smoking a little something they shouldn't be smoking. Hey, can't do that, right? You have potential. You shouldn't do that. So I think this is the same thing. So it's easy to latch on to that, like an Elizabeth Warren or a Jamie Dimon would, because that means that, to me, here's what I always say. Here's the other thing that I say, because I've also done this with speaking to a bunch of crowds about this. There's no legitimacy without scrutiny. So it should be,
I like that.
Yeah, it should be scrutinized. You should point out the warts, yes, right? You should point out the issues. There's two prongs to that. One, the crypto hippies like myself run from that as opposed to running to it. You know what, Mr. and Mrs. Upset Banker in the front row, you're absolutely right. But here's what is happening in some of the tools or resources you may not be familiar with that is helping to aid that, right, in getting resolved. So absolutely an issue, but that's kind of how I handle it. And again, I think Chainalysis is doing a lot of great work there. They do some work with the government. You have a lot of other tools out there, Arkham and others, that are allowing to trace wallets. There's the ability to look at wallets and say, this wallet transacted with this fund that may have sent money to terrorists. These things can happen. The problem is Elizabeth Warren doesn't know that Chainalysis exists, right? And most people that are talking these things don't know that the resources are there to corral some of that happens. Will it ever go away? Totally, no. There will always be folks using it for nefarious purposes, but I think the broader use cases do two things. One, we have to spend the money and the effort to corral that because the upside is so great. And then the other thing is just understanding, similar to how people come to me when I talk about the wealth gap and everything else. Well, Tyrone, there's always going to be poor people. Well, I'm like, yeah, well, can there be less poor people, right? And can we change the definition of what poor means because there's a man walking around worth $300 billion? That's all I'm saying, right? So just a little bit of a framing. And I think what I try to do is let's just shift the snow globe this way. Let's not shake it. Let's just move it so you can see it from this side. And then folks go, oh, okay, that makes some sense. But as you know, humans want to hold on to the thing that I don't like it for this reason. So I'm holding on to this, or I love it for this reason. So you can't shake me out of that. And I think both sides have to be willing to meet in the middle if this is truly going to do what I feel and others feel will be adding more good than bad to the world.
Well, and I think that the idea of wallet analysis, the idea of saying, yeah, we recognize this is an issue, and here's steps to take, and here's cases where the Treasury has managed to reclaim transfers, and I mean that all that adds to the story, and I think that story is an important one, and I think also as far as currency and exchange, sure, it's creates a new path if someone wants to be nefarious, but that doesn't mean it's the only path people have had.
Right.
And I think that the teenage model's good. I really, really love your answer for that. I'm going to use it in my own classroom when I get kind of asked that. And the funny thing is I don't get asked that by undergrads a lot. I get asked that by other faculty a lot. So it just kind of, if you think a little bit about age there, I think there's probably some correlation effect of who's more comfortable and who's less comfortable.
Yeah, absolutely. I just to put the ribbon on that really quickly, right? There's in the last 5 years, there's been $1 billion that has been siphoned from Walmart users through the use of Walmart gift cards. Walmart has tried to become a bank in the United States of America 4 times. They've been denied every time. By who? The banks, because they lobby to the government and they say, no, we don't want the competition. Who is the demographic of Walmart consumers? They are lower income people that use Walmart for pseudo banking services, where Walmart will tell you they've helped folks save over $6 billion in fees of what they're doing. So they've had to do fridge financial services. Tyrone, where are you going with this? My point with this is they're still found a way for scammers to scam Walmart gift cards, but Walmart is doing a greater good for lower income folks. So what do? Do we rail on Walmart, or do we say, all right, we got to find a way to figure this out? Just give them the bank charter would be my answer. But again, I think they're doing good, but even with gift cards, people will find a way to do things, unscrupulous.
Oh, I mean, I'm going to pivot a little bit on that convo. And I think, we are definitely in a world where tech and finance and banking is hand, right? Like, let's look at our friends at Altruist, who started as a fintech firm and now are a custodian, right? And I'm simplifying it, but the idea there is it's all very much connected now.
Yeah.
Right. You don't necessarily think you've got, it's 1850 and we have Wells Fargo and we have the other things. It's all kind of one. It's very hard to parse out sometimes.
Agreed.
So let's pivot a little. And, one of the things we talked about years ago, I think you and I we kind of met and chatted around the time Fidelity said, yeah, we're going to allow our platform to have more crypto on it a couple of years ago. And I guess I want to update us on that and our listeners too, just about when you look at the RIA and BD space, all right, you look at how many $1 trillion are out there. And financial professionals, they're listening to us the first 20 minutes. They're like, yeah, I want to give this a shot. I have clients that are aggressive. I have clients that are in crypto. I can see the modern portfolio theory rationale for having crypto in a portfolio. We want to put 2 to 5% in. How do they do it?
So right now, since we're talking now, we have an ETF approved, so that would be an easy way, and I know we can get into that. So that's the easy button that I think those at BDs and RIAs and dual registrants wanted.
Yes.
I've been saying for years, it's just not that easy, right? So it's there now, but the next level is platform access. Is my platform going to allow it, a Schwab or Fidelity or LPL or Raymond James or whatever going to list it and have it? So that would be the first way. Prior to this, right, myself and others have tried to build that intermediary for advisors to get access to the firms that were acting as custodians in the space to provide that for clients. So that was one way. What I want to say, which is really important here that no one is talking about, is Fidelity, because Fidelity has been, tinkering with Bitcoin for a very long time. I think they started like in 2015 or so. They have their arm, Fidelity Digital Assets. One of the things that they have done, right? So they have their own crypto custody. Obviously, everyone knows the custodian, which a lot of advisors use. They're one of the big 4, right? Custodians that folks use. What they have done now is made it available, and a lot of advisors and folks notice through Wealthscape, right?
Okay.
The ability to go into Wellscape, open that account, purchase that Bitcoin, and have it sit right there inside of their platform. That is a big deal. That
is a big
huge,
deal.
right? Because one of the
Yes.
things that I always say, I say it to investors, I say it to other advisors, I say it to founders. Advisors don't want to pay $2 million for a condo and go across the street to use the bathroom, right? I want the bathroom.
That's a good one. Yeah.
Yeah, I want it all here. It needs to be in my workflow. If it's not in my
Yes.
workflow, it doesn't exist. I pay these tech platforms way too much to go to your platform that is over there. I got to leave. It's a new login. It's a whole thing, client portal. And then the worst of all is the data doesn't come back, right? So I can't get that in my portfolio management software. So which I can't rebalance. I can't build portfolios. I can't do all these things. So
so it's manual, it's time intensive.
Yep,
time chance intensive. For error and mistake comes up. And then you also run into the reality of your custodian saying, "Hey, what are you doing?"
Yep. Absolutely. So I think it's been very much a pain for advisors. Some have been entrepreneurial and jumped out the window and have done it. But again, there's warts all over the place. But I think now with an ETF and then with some of the larger custodians warming up here to allowing the advisor to start that process in their workflows, I've been saying this for years. That's a big deal because one, as we mentioned, I'm not going over there and it's a whole separate set of issues. Two, I can do everything from here from a data, performance reporting, reconciliation, whatever. But most importantly, I can look across my entire practice and go, all right, some will go in retirement accounts, some will go in brokerage accounts, right? That's something that unless you understand our business, you don't understand how powerful it is and how much that's needed. Something we take for granted because we know it, but the builder or the folks that is just, all the advisors are going to come rushing in to save crypto. No, not really. It's going to take a while because that seamless, right, ability to move in and out of accounts across a book of business, across a firm, that's years of architecture and infrastructure that has been built to allow that to happen.
Well, and I think it's also just being able to include crypto assets as part of a model portfolio makes everybody's job easier if you want to use crypto assets, right? Mm-hmm. As opposed to some bizarre DIY client managed, I don't know, just a whole thing in the past, right? And we're kind of finally there. So let's talk about that. So I was preparing for our talk today. January 10th, it looks like the SEC said, all right, we're going to go ahead and here's a number of spot price Bitcoin ETFs we're going to allow to trade on and we're going to go ahead and open that up. And since then, we saw some adjustment in price to Bitcoin. I think there's always that anticipation risk and all those things. But now we've got them, right? So how does that change the world as far as you see it from a consumer standpoint? Does it make it a safer way to own cryptocurrency, or is it just a different way of owning it? I'd love to just get your thoughts on all the Spotcoin ETFs that popped into existence.
I have very strong opinions on this, as I've expressed.
Yeah, I'd love to hear them.
Over the last 10 years. There's a lot that have been said, but I'm frustrated by the fact that there's a lot that hasn't been said, especially as it pertains to our industry.
All right.
And I will start by saying this. I tweeted this years ago. A Bitcoin ETF is the best way for an advisor to access Bitcoin for their clients. It is not the best way for their clients to access Bitcoin, right? And why do I say that? There is 110 million accounts at Coinbase. There are 20 plus million accounts at Cash App, another 30 plus at Robinhood. There's been 1 million places for folks to go get Bitcoin before this. And there's just been this argument that it hasn't been safe. Well, I disagree. If you buy Bitcoin on Cash App, it goes right into cold storage, their cold storage, which they've built. Again, you got to know the new ones have been here a long time to make these arguments. No one has said this. Now, that's the first part. So is it easier for advisors to get a fee, and for Wall Street to get a fee, to make Bitcoin available, sure, to get clients price exposure to Bitcoin. Absolutely. Best way for clients to get access to Bitcoin, I vehemently disagree. No. Now, profile of client matters here. If I'm a boomer, I don't want to deal with doing all this 100%. I understand that. So that's the first bucket. The second bucket is when GLD launched, you had JP Morgan as one of the custodians, right, and holders, one of the APs rather, and you had banks that were the custodians of GLD. The SEC is suing Coinbase, which is the custodian on 8 of the 11. Okay, right? Like no one's really talking about this. So if I'm an advisor, am I okay with that? I don't know. That's a decision to be made. Because of the trust structure, because these are cash creation, right? It's not in kind. Clients, again, depending on the account here, but two forms, your 1099 and your trust tax documents, which means there's some manual tax work that has to be done there.
Sure.
1099 doesn't fulfill it. Again, no one's talking about this as far as it pertains to advisors. Also in that second bucket that no one is talking about is if the SEC is okay with launching an ETF, right? And Gensler said, hey, I'm not really, this is not an endorsement, which this is not their job to endorse securities or anything like that. But I don't endorse this, it's not whatever, but they're okay with launching these based, again, with a custodian that, one, is they're suing, and two, there's an argument to be made as far as advisors concerned that it's not a qualified custodian. Look at the guidance that the SEC has been given for advisors. Just things to think about. Again, that hasn't necessarily been addressed to my liking as far as our space is concerned. The everyday retail investor is part of that second bucket argument and thing for me as well to get access to this. Great. When you buy at a Coinbase or a Cash App or a River, all these different places, there's a toll. I'm from New Jersey, strong aversion to tolls. You pay a toll. Toll in, toll out. That's it. I'm not paying for the custody. Right?
Sure.
In this case, there's expense ratios or whatever else. But again, is that expense I want to pay to not have to worry about private keys and all these other things? Completely understand that. But again, the argument was, oh, this is going to be the best way, it's the cheapest way. And those aren't accurate arguments, because that means to me, you don't understand the totality of the space and everything that all the other options that folks have that have made it easier. So that's the second bucket. Last is the gross oversimplification of it's just going to be easy for an advisor now to buy this and all these flows are going to come from advisors. That is malarkey. Here's why. One, as we discussed, platform access. This all comes down to platforms access. The day they launched, you started to see folks, Wells said no, Northwestern said no, Merrill said, of course. Like we knew this, but I'm sitting there, I'm like, in the lead up, and I was like, no one's saying this. This is a platform access thing. That's level one of the third point. Level two is, fine. Now the compliance officers have a say, right? We're out on this. Sorry, we're just not doing it, right? Or there'll be some parameters. There is, we make Bitcoin available on our platform, the Bitcoin ETF, but hey, Craig, you can't be a cowboy and throw 15% of this in clients' portfolios. We're capping it, right?
Sure.
Or, as some folks have said, Wells said, hey, we're going to allow it, but it got to be non-discretion Client has to call and say, hey, I want it. All right, we document that. Go ahead, Mr. and Mrs. Client, rock out. Right? Everyone is here, but SEC approval, we still want to wash our hands of it. But platform access. Second thing is, as we were talking about before, because we've tried to do this internally, now I want to build a recommendation for a client to show them exactly what adding X amount of the ETF is and the fees and what tool are advisors using right now to make that easy? I'll wait. It's tough, right? Like we use Y charts. We've tried to do it in Y charts. Now there's some really cool crypto hippie tools that we use that we can do it, but those tools don't show up at Creative Planning and Dynasty and
not yet.
Not yet. Exactly. So that's level 2 of point 3. The last is, all right, fine. All these flows are going to magically come from financial advisors. You know as well as I do, I could probably count on my fingers and toes how many advisors I've met that are comfortable having this conversation with clients about what this is, how it works. Oh, by the way, Mr. and Mrs. Client, it trades 24/7, 365, but the ETF is going to stop trading every day and doesn't trade on the weekends. And the call when that client goes, it's down 20% on a Saturday. What is happening here? Right? Like those conversations are going to be really nuanced, and I don't think advisors are ready for that. Last thing I'll say to put the ribbon on this to what you just said, the price has done nothing but nosedive since this thing has launched. That's a tough conversation for an advisor to have. And we got an email from a client day one, and they were like, which of these do you think I should buy? Is it based on the brand? Is it based on the price? Oh, by the way, I also bought some GBTC. Should I sell that? A lot of advisors aren't prepared for that. So anyway, I'm off my soapbox. But I think
it's a good soapbox. I'm gonna dive hard right back in for a hot minute.
Yeah.
I think that having more RIA access through ETFs and perhaps more comfort with certain investors who are used to ETFs but weren't used to Bitcoin. The thing is that this gives you exposure from an asset class standpoint, right? It says, hey, I'm going to get this correlation and covariant exposure. I'm going to buy into something exciting. But you know what it doesn't do? It doesn't give you that democratization of currency, right? Mm-hmm. And I know that in the past, you've been very passionate about one of the things that digital currencies can do is allow instant transfers between the individuals, and those who don't have access to banks or aren't using banks can benefit, right? If we adopt more digital platforms for payment and for rent and things like that. And I think you gave a very poignant example of someone paying rent using digital currency, and how that would speed up the process as opposed to a paycheck and opening an account and having it denied, and just very, very heart-wrenching thing. And I think that's where, the ETFs give us the asset class exposure, right? So like from you've got $2 million in your IRA, 5% of it Bitcoin, maybe turn out better in 20 years. That solves this.
Yeah.
But it doesn't solve the human part, does it?
Exactly. And that has been my biggest beef, and that I've always said. Putting it in an ETF doesn't help the people that Bitcoin should help, right? And was been designed to help the people that are outside of the legacy financial system. It only creates more for those that are inside the existing financial system. So that has been my biggest beef with it. Now, does that mean it shouldn't exist? Of course not. Let's make markets. Let's have everyone get access. But again, if I have $1 million or I could take 5% of that and put it into this, I'm doing okay. Right? Right. What about the people who, again, all right. We launched this technology, right? We put training wheels on a Ferrari. Cool. Fine. Let's do that. So Wall Street could take a fee and advisors get access. While there are still banking deserts in the United States of America.
I wanted to bring that up because I know that's part of what digital currency has the capability of doing, and certainly not done through the ETF market. And I think that's just kind of one of those things that we can't get too far away from, is the idea that having instant access and using crypto for those things can really change the world. And the ETF thing does great things in the RIA space, but I think we can't get too far away from maybe a bigger calling.
Yes, and I've said, right, I know the other part is like, all right, fine, we get the ETF. Why not the SEC or some of the fund administrators or whatever say, okay, some folks, I think Bitwise has said they're going to donate some of their expenses and fees and everything they get to Bitcoin Core and Bitcoin development. Why not financial education? Why not making sure that we don't have baking deserts and really fulfilling the true use case here? That would be more powerful to me. And yes, I get really passionate about this because one of the things that it really, really exacerbates is this gap, this digital divide, this access divide, right? America doesn't have a problem with equality. It's equity that starts to become a problem where folks start to get all prickly, right? These are the things that I've been fighting for when having this conversation. It's like, I get it, have that. But in all things in America now, it's like, if those folks are already privileged enough to get access to that, when do we open the spigot at the bottom so there's a trickle down so we can go to, the 8% of people in America that are still trying to get access to a bank account, right? And they don't have the privilege of being banked because if they did, it's very expensive to be poor in America.
Yes, it
with
is.
Overdraft fees and everything else and check cashing places and everything else. Or how about this? I do these stats of the day on LinkedIn, right? As we know, there's nothing that loses money like the post office. Boy, do they post losses year over year over year. But I say this to people all the time. Want to do just boots on the ground market research? Go into any inner city and go to the post office on the weekends and you will see a line as long as the Taylor Swift concert. You know why? Because I can go in there and get money orders and I can do very, very fringe type banking things and it's not as expensive. So why not some of these fees go to boosting or lobbying the government to say, let's just please make post offices like mini community banks, because every community should have a post office and there should be people that can walk in there and do basic banking. You telling me that all those fees that are going to be generated from these ETFs wouldn't be able to at least lobby for it? Let's say it doesn't get done. So I think part of my problem, and one of the things that I've been fighting for so hard with being in this industry 10 years is, again, all Bitcoin is a really big flashlight, right? We haven't had a real-time payment system in this country until July of last year. I think 2019 or so, FedNow, right? It took them 4 years. Funny name, FedNow took 4 years, right? It was announced 4 years later, we get it. FedNow, which is supposed to be the real RTP, real-time payment system. Again, we've had it for corporations, not for the everyday individual. Right. So I can deposit my check and my check settles now. I don't have to wait 3 days. You know who that helps? That helps the underserved, underbanked, unbanked folks in this country, because now when they transact, that money settles in real time. That helps those people. I need my check to clear now because I'm going to get evicted Saturday. But no, I got to tell my landlord the money's settling Tuesday. Don't please. And this was my last straw. So you would have a hard time convincing me that Bitcoin that was introduced to the world in 2009 hasn't had something to do with that, because a lot of people are saying, hey, this is real time. Anywhere in the world, massive amounts of value, no matter what, billion, 3 billion, send it now. Give or take 10 minutes, it settles on the blockchain, but the person can get it in their wallet. Yes. So anyway, not to get into all of the crypto hippiness of it, but these are the things to me that I think if we really just rally behind an access thing, that's it. Let's just get everyone access. And if we do that, if all of the hubbub and the money and the marketing and everything else, imagine if 1/10 of that was just spent on some of the financial dislocation in this country. It's disheartening. And it's hard to get behind, but I understand money, he who has the goal makes the rules, as they say.
No, I wanted to ask you about that because the first thing that I thought when I read about the ETFs, I would go back to you on stage in Chicago Morningstar. And I go back to your impassioned, what you just shared with us, right? Is that digital currencies have the ability to pay now and instantly transfer, which then has the ability to transform poor communities. And so I think we needed to talk about it today. I absolutely wanted to talk about that.
I appreciate you bringing that up, and it needs more of a voice. So I appreciate you for that.
Yeah, I wanted to bring that up. So to transition, it's kind of in the space, I think. Why don't you tell me a little bit about 401 Financial and what you're doing there? I think it piggybacks.
Yeah, no, it does in a similar vein. So one of the things that, and I think this goes all the way back to my childhood. So I was the first in my family to finish high school, right? The first in my family to get a high school diploma, let alone go to college. And my dad came to this country from South America with a middle school education, barely able to read and write. Met my mother, who was a teenage mother. And they kind of got together. It was kind of like, all right, my father's like, well, if you help me get a job, I can help you get off welfare and take care of your child. And I came along 6 years later and grew up in a home that was completely financially illiterate and all of the struggles that come along with that. Wall Street is a wonderful place, by the way, to work being financially illiterate because you get up to speed very quickly and you are face to face every day with what the hell you do not know. So I got a crash course in just this language and this other side of things and money that I just didn't understand. So fast forward to last year when we launched 401, I wanted to launch an RIA, which we are, a registered investment advisor, that made financial planning available to anyone with family office level type services in their pocket, on-demand planning. And I didn't want to do it in the traditional way where we were using all of these terms and language that people did not understand. So we spent a mint on our marketing to make sure that we didn't use terms wealth management, and we used different colors and hues and visuals that helped create emotion for folks to go, that might be for me. And the goal was to work with people who didn't feel like they were financial advisor worthy, right? 3 of our largest clients are women, Black women in their 40s. I'm proud of that. 90+% of them have never worked with an advisor before. There's a focus on financial education, but we wanted to break the model. It's not an AUM model, right? We have different ways that we get paid, which is a subscription fee. We do hourly if needed. We do project work. And if folks can't pay, we do it for free. And that's core to what it is that I wanted to build. And I wanted to get away from the AUM model. I wanted to get away from using jargon and terms, but I also wanted to be it to be a vision of what financial planning and wealth management firms look like in the future. And that has resonated with a lot of industry stalwarts, yourself and others, about what we're doing. So really happy about what we're doing there. There's 3 of us. We have my partner, Eric Smith, who's a certified financial planner, and Amber, who's our COO, and my niece. And what we've built and architected, I think, is something that is going to be a model that everyone will follow. And what we're doing now is we're in this test phase, right? We wanted to test it out and see if it could work. Folks are, Tyrone, you can't scale that model, it's not profitable. Well, we are, right? You can't scale it. Yep, we can, right? AI helps with that. Using a limited tech stack helps with that. So we kind of launched at the right time because it's allowing us to have heft and scale using technology. And we've really excited about what we're doing because we build from the client out, not the technology in.
And I think that's very important because we look at 401 Financial and we look at innovation, and it's a firm that doesn't have the infrastructure cost, and I think that lets you scale, right? Is a lot of the time AUM minimums, they're not set because, Montgomery Burns is in the back doing this with his fingers. AUM minimums are set often because of cost infrastructure issues, right? Yeah. Physical office considerations, that we have these 8 software packages we pay for on a regular basis. We have custodial fees. And so it really doesn't work to have someone with less than $500,000 because we're not breaking even. So I think the more that you can provide quality advice at scale, and the more you can do that with lower overhead, the more you're able to serve constituents that you want to. Yep. And I think that that's a very innovative approach to fintech. And instead of looking at it as far as we've got all these fintech bells and whistles, we can look at it as far as, okay, well, we're just doing what we need to get the job done. And, it's a really neat model. And I hope a lot of advisors listening today explore that at 401 Financial.
I appreciate that. Yeah, I hope they do too. I think, and I actually spoke to a gentleman yesterday who's kind of exploring this as well and doing it in his own way. And yeah, we need more advisors to do that. But one of the things that I had this conversation with Cheryl Penny, I've had it with Peter Maluk, I had it with Jamie Hopkins and Jason Wank and others, is what needs to happen is, and we design this as like some type of reverse referral program. And what I mean by that is the bigger firms just have this pipeline of people that they either can't serve, the advisors don't want them, but they're somewhere between $500,000 and $2 million, and they send them away. Where do these people go to get advice? If they send them to us, we're not AUM based, so we're not going to fight you over the assets. We can handhold them, be like a satellite paraplanner firm, right? They can still use their research, their data, whatever, but we just kind of handhold them, peel back the onion. Now, let's say Craig has a liquidity event and now he's worth $5 million. We send him back. But in the interim, we were able to gather the crumbs, which all we need is to continue to keep going. One, these people get the advice and help that they need. And two, right, if you look at the recent Edelman Engines report, like we're way at the end in terms of trust and reliability, right? It gives people a better feel for our business to go, oh man, that was an awesome experience, right? They didn't sell me products. It was advice only. I didn't have to worry about anything. They kept my best interest in heart. And it was a 401 web app right in my pocket and I can get access. So that's what I've been talking about to the larger firms as an engine for this, because now if younger firms that want to be entrepreneurial here do this, and the bigger firms are kind of just feeding them, right, the fish that they don't want to eat, it keeps us alive. And then thus, when there's a bigger complex tax planning, estate planning issue, we don't have the ability to scale or do that. We send them back to you. Right. And it's just this symbiotic relationship that I think helps the industry grow, changes the complexion of wealth. Rising tide lifts all boats. Right. I think that's which we think this is the model for the future. And we want to be the firm to usher that in.
So I think for our brokers and advisors and agents listening in, I mean, that reverse referral model is refreshing. I think go check it out and check out 401 Financial. Yeah, because I think that partnership could, really help focus on what advisors working in that more sophisticated tax world want to do, and clients that need help and need solid financial advice from CFP professionals need as well. I think it's a fantastic model to that.
I appreciate you. Thank you so much.
Well, thank you for your time today, Tyrone. We've gotten real deep, and I really appreciate it. I really loved our conversation, and thanks for being open and vulnerable and having a great chat.
Of course, this is a lot of fun. Thank you for having me. I appreciate you.